Hey traders, welcome back to this free forex training. In this lesson I will teach you how to read forex charts so you can understand price movements and better make trading decisions. Okay, so now we dive to types of forex charts. So we have the line charts, we have the line charts, we have the bar charts, we have the candlestick charts, we have many others. You see here we have the line with marks, we have step line, we have the area, we have the HLC area. A lot of ways to find out price movements have been developed over time, but these are the major ones known by traders. These are the ones that are basically used, that are primarily and mostly used by traders. Okay, so now we'll speak of the line chart. Now the line chart is a simple chart that connects closing prices over time. It's good for spotting trends but lacks details. Yeah. So just like it connotes, it's a line chart. It basically looks like a line. Let me show you an example of what it looks like. No, let me do that. Let me do that here. Okay. Sorry. Now the line chart. You can see it's showing us the price movements, but there isn't much of a detail like this here, which is the candlestick. There isn't much of explanation like the candlestick chart. Let's go back to the candles. So you see that the candlesticks tell more stories. See, price went all the way high here, came back down, went a little, came back down. There's more explanation to this than the line charts. So that's why it says it lacks details. Now the bar charts, each bar represents the open, high, low and close prices of a period. So for the bar chart, let's use the bar. Okay, now each of these represents the open price, the highest price, the lowest price, and then the close. Let me show you an example here. Now if you look in here well, you see there is a high. For this bar here, there is a high, then we have a low, then this should be the opening price, and then this is the close, the end. This is where price ended, because this is a sell bar. Like price went all the way up here, came back down, rejected, came all the way down here, and then rejected and closed inside again. So this is basically, we label that the low of the bar. Then we label this the close of the candle. Then this will be open of the candle. Then this will be the highest price. That's the high of the bar. Sorry, not the candle. The open of the bar. It's not a candle, it's a bar. Okay, then the close of the bar. This is also used in trading, but it's barely used because it also lacks details compared to the candlesticks chart. Understand? Now the candlesticks, which is the most popular, shows price movement with candlesticks. Each candle tells a story. I think we have all seen the candle chart before, but this is basically what the candlesticks charts look like. Understand? There are candles forming as price keeps moving up and down. Like each candle on this chart now, each candle takes 4 hours to close. if I move down to the 15-minute chart, each candle takes 15 minutes to close, like that. That's how price moves. Okay, now we move on to the next, understanding candlestick chart. Each candlestick pattern represents a time period. I just explained that a few seconds ago. Every candlestick on every chart represents a period of time. It could be 5 minutes, it could be 15 minutes, it could be 1 minute, it could be 1 hour. Depending on whichever time frame you switch to, each candlestick is telling you that price moved for about that range of time before the candle closed. Then we're talking about now green / bullish candle. Okay, now for me, I don't have green on my chart, but when you just open your TradingView account, which is this account I'm using to show you the charts now, most times the colors is always green and red. That's why I use the example here. So now in here, you can take my own chart as you take the green candle. The green candle on my own chart here will be blue. The blue candle, which is the buying candle, while for the bearish candle will be the black. You can see my own candle is coming down. So any candle you see coming down is the black, while the going up is the blue candle, which is the bullish candle. Now, every bullish candle you see on my own chart here is simply telling you that price is going up. Price went up when that candle moved. Then, likewise, every candle you see going down is simply telling you that price moved down. Understand? While that candle was still open, price kept driving down. Then now the wicks and shadow. The wick shows you the highest and lowest price during that period. That is, if a candle opens and keeps running throughout a particular time frame, then you know that that candle took that time to run, and after the whole running, you should see probably a wick, because not all candles print wick at the end of their movement. Not all candles do that, you understand? But most times you find out that every candle has a wick. So from the body of the candle to the wick, you see from this part where there is no shadow at all is what we call the wick. This tiny part here is what we call the wick. Understand? Alright. Likewise for the blue candle as well. From here to here, from this high to this low, is the wick of the candle. So that tells you that price rejected at that point. In the upcoming classes, you get to understand why we have these moves to the downside. Okay, now we dive back. Now, example: a strong green candle means buyers are in control. Let's show you an example there. Now, if you see this strong blue candle is telling us that buyers are in control here. This strong bearish candle, which is the black, is telling us that the sellers are in control at that time. So now, time frames. When we're talking of time frames, we're talking about this hop here. Those are the times within which a candle opens and then closes. That's what we mean by the time frame. Okay. So now, forex traders analyze different time frames based on their strategy. So there are different kinds of traders in this market. There are traders who love to trade probably within a few minutes and they are done. And there are those who love to trade more of long-term trading. That is, you invest your money for a long time and leave it, and then you come back after some time to take out your profits. So now those traders are grouped into just a few below here, although there are some other kind of traders. Now we have scalpers, which is those who take short-term trades using the 1 minute to 15 minutes chart, while the day traders use 1 hour to 4 hours charts to trade, while the swing traders trade long term using the daily and the weekly charts to place their trades. Yeah, like I personally, I'm more of a day trader. I trade between time frames of 1 hour and the 4 hour. Understand? Sometimes I do scalp as well, I move down to the 1 minute to take my trades. Okay, now higher time frames. Now this is a tip for you guys. Higher time frames show the bigger trend, while lower time frames help with entry points. So this is a key point that you should hold to your mind, guys. The higher time frames, which is probably from the 4-hour, daily, the weekly, those time frames are for finding out where price is headed long term. They show you how far price is headed for a very long time. It shows you the bigger trend, while the lower time frames are the time frames where you can take in your trades, where you can enter the market to make profits. All right, now we have support and resistance. This will have a very much more broad video explaining this term here, which is support and resistance. So support and resistance are just basically key levels or psychological levels on the chart where price reacts to time like that. So now a price level, we're explaining support now. Support is a price level where buyers step in, stopping the price from falling further. Let me show you an example of that on the chart here. Okay, said support is a area where buyers step in. Let me read that again for you. A price level where buyers step in, stopping the price from falling further. Now if you look at this chart here now, you see price was falling all the way from here down here. Now buyer stepped in and then price started moving up. Price started falling again down here. Buyer stepped in and then we had a move upwards. Price fell all the way down here again, rejected. Buyers came in, rejected the price, and then started falling all the way down here again. Buyers came in again, and then the price went higher again. So now if we were to mark our support on all these levels, we'll be marking out those areas where price kept pushing up from. Those are support levels. Those are our support levels. You see, price kept pushing up here. This is another support level for us. So every part you see that price keeps pushing to the upside is your support level. Support, this is another support down here. This is another support here. This is another support here. Support is basically the lows before we had the buys. You understand? So then resistance level. Resistance level is a price level where sellers take control, stopping the price from rising higher. Now instead of marking the support down, now we're looking for where price stopped moving higher and started coming down. You look at this level, you see that price got to this level and then started coming down from there. That is our resistance. Now price got to this level here again and started coming down from there. That is another resistance. Price got to this level and started coming down from there. That is our resistance as well. Okay, another one here. Price got to this high and came back down. That is another resistance. So those areas where price keeps rejecting and falling back down is what we call our resistance levels. Now for example, if gold keeps if gold keeps bouncing from $2,000 per ounce, that's a strong support level. Like for example here now, you notice that there's a key price point here, which is 2,920. Now you notice that price keeps hitting that 2,920 area. Let me use the path tool. Price rallied up here, came back down, went up, reacted to the 2,920 again, then came back down, broke it higher, then reacted to it, went up, came all the way down here, reacted to this minor, then came back to this major resistance level again, came all the way down here again. So those key areas where price keeps reacting to, you notice that that is a very much strong support. That is a very much strong resistance level. So that's just an example for you guys. Alright, I think we are good to go. We are done with the class now. Now in conclusion, you all know how to read the forex charts now. You can spot trends by yourself and identify key levels. Okay, so in the next lesson we'll discuss how to use technical indicators to improve your trading accuracy. So if you're ready, please subscribe to my channel. Never forget to subscribe to my channel, and then like and comment on this video. Any questions you have, comment on the video. But if you're ready for the next class, make sure to type in Renox in the comment section. Bye for now and peace out, guys.